Hello everyone, welcome to this episode of Market Pulse. I am Ajit Mahuli, the founder and mentor at LPAT. Let's take a look at what the indices have been doing and are likely to do. So the markings on the chart are still what we had for the last week market pulse, and markets so far behaving the way we anticipated. They are inching up, but they might still inch up. On the monthly, we are seeing a big bullish candle for another 3 more days, and we'll know how this candle closes. Remember that red line of 19,860 is a crucial area. So what could happen is we could still move up into this area close to 20,000 and then close below that the next month. Before the beginning of next month, or this month will close down and next month will start there and probably start coming down. So the location is not favorable for the swing longs. We'll have to wait for more price action clues. But yes, short-term longs are still valid, and shorts are not yet allowed because we need to get some confirmation. Those are the still demand areas, or these are the smaller weekly time frame demand areas, and this is the monthly demand area. No supply on the monthly chart, and the trend remains up. So this is still range bound for the last let's say 1, 2, 3, 4, 5 months. We have been ranging. We went beyond 20,000 and then again pulled back and gave a lower low. So it's going to be a crucial week, and the next month will be crucial to understand where prices will likely to go. But also remember, the volatility will keep moving up. So smaller time frame levels might not honor after we hit that supply. So be careful about that. On the weekly chart, if you see, that's a supply zone. We have gone to the distal. Looks like we are going to go up inside to the daily supply zone here. The selling has started from 21,570. So technically price has room to move up, but it all depends on how this area is negotiated in this week, since we have only 4 days. So it is going to be crucial. Plus we have the monthly expiry. So be cautious about leverage positions and trade in normal trend trading stocks rather than trading the index. Again, no demand zone formed as we have moved up. The next demand zone still remains here. But remember, we have reached an area of demand zone on the weekly chart. So this area will be crucial for Nifty. On the daily, as we go ahead, we see all these. This is that main area of supply from where, after giving a high price, broke down and shifted the trend. The move up here has happened without creating any demand area. These are all smaller time frame demand areas. So let me just hide this. So these are all smaller time frame demand areas. So if you take a look on the daily, there is no demand zone. Only we have smaller time frame demand zones, but they are still holding. And this is not a real bullish kind of price action that we would want. It's more of a compressive move up. So once we get some confirmation for short, we could see a faster move down at least towards 19,300. But shorts will have to wait till we go here. Looks like we will inch up towards 20,000 or 19,050 to 20,000, 950 to 20,000. So bias as of now is towards the long side. Smaller time frames will provide you enough clues. That's the area of supply which is fresh and responsible for moving down. And on top, we have this area. That's the area of demand zone where you can, if you pull back, you can look for buying again up to this area, because this range could continue by till the end of this month. So if we get a pullback somewhere close to sub 700, you can still probably go long for a short term or an intraday trade setups, because the moves to the upside, if you see, are pretty fast. And once we reach this area, based on confirmation, you can start with some spreads, because volatilities will rise as we keep moving in. And if we break this, the next area is here. And once we break 19,300, the trend should shift towards the downside, and we could see a retest of 18,800 areas. So still long bias, but Nifty has very aggressive trade setups. So you can trade options on pullbacks only about 650. You can go long for a target of 850. That will be a good reward to risk ratio. Taking a quick look at Bank Nifty. So on the monthly chart, Bank Nifty is moving up from this demand zone. There is this area from where selling had was initiated, and 46 300 is nearly the high, which the index failed to break and fell down. Now we are inching up again. Maybe there is a chance that we might go towards 44 200 to 44,500. The lower time frames will give us more clues. That's the area of demand zone. We could, if we come down again and break this low, we could test it much deeper. On the weekly chart, if you see, Bank Nifty has been more resilient as compared to Nifty. It's failing to break that 43,300 level. So this supply can get tested deeper here up to 44,500 at least. And the next areas of demand zone are going to be at 41,300. So right now, avoid shorting Bank Nifty. It could go again all the way up to this based on the price action. That's sort of a bullish price action, and possible that the next week or two will be uh, defined by how Bank Nifty trades throughout the week. Again, we have the expiry, monthly expiry. And if you see this, that's the area of demand zone we had marked last time. Prices nicely came there where I had gone long and it's holding. Looks like once we go beyond 43,800 or 900, prices will move definitely up to 44,300, at least 44,200, or even maybe 44,500. So bias is towards the long side. Avoid shorting, or you can trade options. If it permits reward to risk ratios. So once we break 43,200, then we could again retest 42,500 to 42,000. So currently, Bank Nifty looks good for a move up and has good reward to risk ratio as compared to Nifty. So that's the area on the 75-minute, which from where we went and gave this high. We pulled back. This was news-based fall. Prices are still holding these areas. But once we go and trade above this, any pullback could be used to trade on the long side. Or if we come back close to 43,300, this will be again a low risk opportunity to go long, at least towards a target of 43,900, 800 to 900. But if we gap up above this, do not trade that breakout, wait for it to settle down. And if it closes bullish in an hourly candle or a 75-minute candle, then the next pullback at these areas should be used to go long all the way towards 44,400. So bullish bias even on the Bank Nifty. Avoid shorting as of now. Let's take a quick look at India VIX. So as expected, India VIX is also after coming down, it is again started to move up. It might remain range bound between these areas of demand and supply. The India VIX before it either breaks up above this. If it breaks up above this, we could see 18,800, 18,500 on the index, and then it can go all the way towards 50. So as prices go up and volatility increases, you have to be cautious. So the short-term trend this week at least remains to the upside. We need confirmation for shorts. Avoid going short, and every pullback can be used to go long for short-term trade as the bias towards as the short-term bias is towards the upside. Hope that helps. Please go through this disclaimer.